Hello, everybody, and welcome to Investing with IBD, sponsored by Direction. It's Justin Nielsen here, and it's Wednesday, April 13th. I'm joined by Arusha Peiris. He's actually right to my side today. We're in the office together. This is actually my last visit to the office. Next time I come in here, I'm going to need a visitor's badge because we are moving offices at IBD. So you see a lot of crates in the background. You see a lot of empty desks and a lot of monitors, if anyone wants a monitor, I guess, because they're not all coming with us. But so it's a little bittersweet one for me because I've been here for 25 years at this office location. And yeah, so this is half my life right here. But Arusha Peiris is joining me, as always. O'Neill, Global Advisors, Portfolio Manager. You're staying. So this is not your last time to the rodeo on Beatrice Street here, but we'll go ahead and talk a little bit about the market. We'll share some bill stories. I have a few. I'm sure Arusha can pipe in with some too. Maybe we do some Scott O'Neill stories as well, just while we're at it. And then, of course, we'll go over a few stocks that are on our radar. So how are you doing today, Arusha?
I'm doing okay. It's been an interesting day, obviously, with all the moving out and things like that.
Saying goodbye to people.
Yeah. It's definitely going to be weird not working down on this floor and having this floor not have IBD here. So definitely a little bittersweet. Obviously with the market.
Wait a minute. Why is it sweet?
Bittersweet.
Yeah, but I want to know what the sweet part is. It should just be bitter. There should be no sweet
there
part.
should be sweet.
Yeah, exactly. So I'm not down.
I think it's a little bittersweet. I'll be going upstairs again. I'll be sitting up there. I'm actually not a view.
Yeah.
Regarding the market.
Well, if you think you have a nice view, if you come to the 29th floor where we're going to be and see all of downtown LA, you can see the ocean, you can see Hollywood sign. I mean, we'll compare views. We'll see.
Yeah, we're not going to compare views because you're definitely going to win left and right on that one.
Don't worry. I'm going to be at home most of the time. So that's a view I'll never see. By the way, folks, you're going to have to bear with us because Arusha and I don't get together very often, and usually there's a reason for that. I think we were forbidden from being in the same room doing podcasts, but we have too much fun here when we do. The first time we did a podcast together, or webinar, I guess. Yep. Someone asked if we were high in the Q&A.
Yes.
Yeah, because there was too much giggling, apparently.
And the answer was yes.
Yeah. Well, hey, the pot stocks were moving, so we had to find out what was going on there. So let's go ahead and start with the market. Arusha, how about you pull up the NASDAQ composite, and we'll take a look at what is going on. Certainly one of the things that, the market's been looking shaky. So in terms of the big picture, we put the market uptrend under pressure a while back. We were actually considering going into correction. The trick was that the S&P 500 was holding a little bit better than the NASDAQ. Both of them did fall below their 50-day moving average lines. We have distribution piling up. I mean, on the NASDAQ composite, we've had 4 distribution days in the last 8 days. So that's kind of a distribution cluster. That's not a great sign. But today's action, very different. We had a strong move, over 2% on the NASDAQ composite, strong move on the S&P 500. What's your take, Arusha?
Well, I kind of feel like we're still... Yeah, I call it a bear market rally, call it a correction, call it whatever you want. But I think we are in a very tough market. And so whenever you see these really high volatile days, especially the upside after some good selling, and Justin, you mentioned the clustering of distribution. When you see a clustering, and I think on the NASDAQ, it's been 4 distribution days within 8 days or something. I mean, it's been a really short amount of time. When you see that, that's an extra kind of warning sign or negative to the market. And so now when I see the markets rebound, or the NASDAQ rebound up 2%, it looks like I think the volume was tracking a little bit lower than yesterday. I don't know how it's finished, but this just keeps telling me that we very well we're still in this kind of volatile bear market type of rally, where in bear markets you're going to get these really strong upside moves, kind of like what we had a month ago, and it goes so far enough to make you think that, hey, we might have a chance here, and then they start knocking you back. Or
if you're thinking we might have a chance here, or even worse, oh my gosh, I'm missing out. I don't have enough exposure, and I need to scramble. And usually by the time that panic mode hits, that's where things are kind of done by the time you get into that mode.
Yeah, so the quick answer is I think we're just still in the same type of environment. This is an environment that's you want to be cautious, it's risk off. That being said, if you're going to play this market, and there's a whole section of the market, the energy area, the ags,
Hmm.
and those commodity type of stocks, those stocks are acting, they're in a bull market, right? So we have this really kind of strange market where there are a lot of stocks that are going through a bear market, but then there's a third of the market, it seems like, that's going through a pretty strong run here, a bull market, and they're acting like tech stocks were acting back in 2020. And so as if you're playing in those and you're getting traction on those, then you keep doing that. You're in sync with the market. But in the end, I think the portfolio, how your results are doing, that's what's going to tell you if you're in sync or not with the market.
Right. And that's such a good point because I think a lot of people don't realize that the market is constantly giving you a report card. It's constantly giving you feedback. And if your stocks are working, that's what allows you to put more money to work. But when your stocks aren't working, and Mark Minervini, by the way, he was the guest on IBD Live today. And I mean, he said it really well. If you're 25% exposure into the market, why would you increase that to 50% unless you're making money on that 25%? That just doesn't make any logical sense. So again, you use your stocks as a feedback mechanism. If you're making good decisions, if you are in sync, if you're making money, that's the market telling you, hey, you're on the right track. And then you can start putting more exposure. But as always, you have to be careful of not overdoing it. Bill was always he was a hawk on his average cost because remember, he wasn't buying just once. A lot of times he was getting into a position sometimes he'd start with half of what he wanted. And then if it went up to 2.5%, he'd follow that up immediately. And then as it matured, he would get more and more into it, sometimes getting very large position sizes plus the capital appreciation. But there's no reason to do that until you start making progress. In fact, that can get you out of a lot of trouble if you start with, let's say, a half size position. And then if it doesn't work, well, you haven't lost that much money. It's how you keep your losses small. And when it does work, it's how you put more money into those big winners that end up being your best flowers. He always talked about in terms of gardens, you have to water your flowers and pull your weeds. And so many people are always watering their weeds, thinking they need to put more money into the ones that aren't working because eventually they will work. And then they take their profits too quickly on the ones that are blossoming.
Yeah, the market will slowly pull you in, and it will slowly push you out, or sometimes it will quickly push you out. But looking back, and hindsight's always 2020, but looking back a month ago, we had a fall through day on March 16th on the S&P 500 and March 18th on the NASDAQ. And the right move, if you're using our strategy, was to buy stocks and get some exposure to the market. Now, if you weren't making progress on those stocks, you got stopped out, then you're following the methodology still, and you're lightening up at that point. So it's not necessarily like you shouldn't have been in the market over the last month or so. You should have been trying stuff to get feedback. Now, if you tried some of the commodity stocks, you're making progress. Maybe you're increasing your exposure over the last month. But if you tried some of the technology stocks that did so well in 2020, you might have made a little progress, and then you probably gave it all back in the last couple of weeks. And so now you're backing away. So in the end, you have to listen to the market and also look at your results to tell you whether you're making progress or not, and which will tell you whether you're in sync with the market or not.
Mm-hmm. And I will say that was a tricky part about the March 16th follow through day, and we've talked about this, is that we had so much of the bottom fishing happening, where it was the Shopify's, it was the Chinese stocks, the things that were down 70-80% off their highs, those were moving up. And granted, the moves were big, they were sometimes 10%, 20% moves in a week, but okay, now it's still 60% off its high. So what exactly do you do with that? And it doesn't always have to be stocks. We've talked to a number of guests that have been on where sometimes they're doing ETFs. One way that you can do it is maybe you just throw on a market ETF during a follow through day when a follow through day happens, and then as the stocks set up, especially in a situation where the stocks aren't setting up as much. And so then if you get that market ETF, let's say QQQ, or SPY, which is the NASDAQ 100 and the S&P 500 respectively, well, then you can start decreasing your exposure in the market index once more stocks set up and kind of shift it. So that's something that I've seen a lot of people do. And if you really feel like you need to get exposure quickly, you can always use some of the leveraged ETFs. There's QLD on the Qs or SSO on the S&P 500. Those are both 2x, or you go TQQQ on the Qs for the triple leveraged, and UPRO for the S&P 500 on the S&P 500. So again, a lot of ways to do it. We did the UPRO on leaderboard, and then we backed away as our exposure got higher in stocks. Then we started just getting out of our S&P 500 UPRO position and sold it into strength, and actually didn't go through much of this downturn in UPRO in this case. So again, it's just all about that balance, finding the right level of exposure and letting the market tell you. So before we get into our second segment, let's talk a little bit about what you mentioned, some of the stocks that were driving things forward. It certainly seems like, at least today, and what's been setting up the most, it's kind of our old familiar names, the cyclical stocks, the oil stocks. But leisure, lodging, travel, some of those were kind of looking interesting today. Do you think there's been so many of these reopening plays that have tried? Do you think that might be third, fourth time's a charm?
Potentially, I'm not sure. I'll just quickly pull up like Hilton here, and so that had a pretty good day. It's forming a cup with the handle here. It really kind of broke out of that descending channel within the handle, and so it's within 1% of breaking out here. So it has a chance here. I mean, the relative strength line is acting pretty well. It's almost in new highs at this point. It essentially is at new highs. So yeah, it might have that chance here. It really comes down to your conviction in the reopen play, and sometimes you'll have to take 2 or 3 shots at these. And now there are plenty of times where with that third shot, I'm always saying there's no way I'm going to try it again, and I don't, and that's when it goes right. So it just really just comes down to, do you really want to capture it if it's going to go, or are you willing to get shaken out a few times on it? So it looks pretty good here. Let me pull up Expedia just to take a look at that one. Now this one still needs a little bit more time. It's working on a handle below the 50-day, but it's had a pretty nice shakeout, so it wouldn't surprise me for this to start working again if there is that true if the true money or the big money is really now starting to come into the market into this area. But right now, I mean, leisure travel booking is 161 as a group out of 197. So you might have a little bit of time to truly let some of these stocks prove themselves before you have to get into them. Or you could stick with the ones that have been truly working, which are the energy stocks, the commodity stocks, the ag stocks, that when you look at the industry groups, and Justin, I think we went over this the last time we had our We Time, but just the industry group rankings, right? And you show this on IB Live every week. It is just like the top 15, maybe like 13 out of the top 15 are commodity stocks.
Oil.
Exactly.
Energy, coal.
I mean, it has been screaming at you to stay in that area. And if you were, this is the Livermore line of least resistance. You don't have to worry about the stocks going through base building process and working through overhead supply and things like that. They're breaking out and they're trending well. And so plenty of times you just want to keep it simple and just go with the stocks that are truly in demand. And you can look at it from a relative strength basis, the stocks that are breaking out first and when the market's turning around, or just as simple as looking at the industry groups and what are the top 20, what are the top 40 industry groups?
Yeah, absolutely. So when we come back, we're going to get into a few Bill stories from Beatrice Street, a little bit of a retrospective on our time here, or at least my time here since Arush is staying, and then we'll get into some more stocks. So stay tuned. We'll be right back. The Direction Hydrogen ETF offers exposure to the top 30 pure-play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen-related subthemes. With clean hydrogen-based energy expected to grow 5 times in the next 30 years, companies building hydrogen-related businesses to generate power, heating, transportation, and more will likely thrive. Okay, welcome back to Investing with IBD, sponsored by Direction. It's Justin Nielsen here, along with my good buddy Arusha Pires from O'Neill Global Advisors. He's a portfolio manager there, and he's a portfolio manager that is staying in this building, whereas this is my last day in the building. So anyway, let's go ahead and we're going to talk a little bit about some of the stories over the years. And we might as well start out with a lot of people kind of ask about Bill's routine. And I have to say that Bill O'Neill, the chairman and founder of Investors Business Daily. Again, I worked for him from 1999. September of 1999 is when I got hired by Bill, 2 years after starting at IBD. And I worked with him until, 2015, something like that. And one of the things about him is just his discipline. He just every week he had his routine, what he did. And Arusha is going to be my Vanna White next to me. He's going to show the big maroon books, because this was part of his routine while I worked for him. Every Saturday morning, he would get these huge books, and you can kind of see, it's Arusha's whole torso basically, and he would flip through these books. Now this is volume 1 that you're seeing, folks. It's hundreds of pages. So I think all told, it would be about 1,000 pages, charts, and more charts. And he'd just go through those. It would start with the top industry groups. That's where it would start. So right now it would be looking at a lot of oil stocks, a lot of coal stocks. And then he would just go through and he would be looking for patterns. Now, these charts, and this is where MarketSmith, the ideas of putting these fundamentals in the charts came from. He wanted to have as much information as possible on these so he can make good decisions. And when he liked something he saw, he'd rip out the page and put it next to him.
Yeah.
And he'd start making notes, put a whole bunch of those together, and that's where he would start. That's where he would start his research every Saturday morning. Scott O'Neill would tell stories of how that was his childhood. At the breakfast table, there would be those charts, that he would go through. So certainly one of the things that I think made Bill so successful was his approach, his discipline. Again, trying to take as much of the emotions out of the equation as possible. And so I saw him apply that, year after year after year. And it doesn't matter what kind of environment the market was in, he was still going to be looking at charts, no matter what, to see what was setting up, to see what was looking the strongest, to see what relative strength lines were holding up the best, and to see which groups were also setting up and potentially going to take the leadership positions. What about you, Arusha? Anything on your end?
Well, yeah. Well, regarding Bill, I would say, obviously we all know that Bill is one of the legendary stock investors out there. He boiled the stock strategy down that others could actually learn from, right? He kind of classified it enough that he created a framework. And so I was a customer years ago, and I learned it, and I was inspired by it enough to come in and work here. And I remember going to an event in 2002 in New York, watching Bill O'Neill analyze charts. And I remember that last hour where he's taking questions. But I also remember him saying, Justin, pull up this chart.
Right.
Justin, pull up that chart. And so Justin was in the background there pulling up, and I think it was on the laminate.
Oh, was it? Okay.
It might have been.
Yeah.
I'm not sure.
Well, I think, in 2002, we were just shifting
half.
over to PowerPoint.
Yeah.
Margot Schuster, who worked with us years and years, she was a little nervous when I said, look, I just want to put this stuff online, have it on the computer. So even when I put everything on PowerPoint, she still would have the Elmo, I think is what it was called, where you could put the paper, or whatever, and it would project it onto the screen. So we still went a full year, kind of with both for a while there. But, certainly it was one of the things when I first started with Bill, everything was on transparencies.
Yeah.
So we would have the workbook, and, the workbooks, again, we would have a lot of printing time that we had to kind of do ahead of time to print the books. But then Bill would often say, hey, no, you know what? The stocks were breaking out. We have to show these stocks now. And so it'd almost be like a stop the presses issue. Like, okay, we have to do some changes and put some more charts in here, or update the charts to show the recent action, because we didn't have daily graphs online quite yet in some of those cases. So yeah, it was one of those things. He wanted to have the breakouts in there. And so every now and then, he would usually stick to the script in terms of, okay, these are the charts I'm going to cover. but every now and then he would say, "Oh no, we need to show such and such." And so I had a big accordion folder where I had all of the transparencies broken down by, here's 1 through 10, here's 10, 11 through 20.
Wow.
And so I'd have to say, okay, what page number is that? Ask someone in the audience, and they'd tell me, and then I'd go, flip through it. And then, Bill would say, there were a couple times where you put that on there and it was crooked. You have to make sure you put it on there. And stuff, because he was absolutely a perfectionist. He wanted to really put on a good show, really, show people that, hey, we had our stuff together. And so he's like, if you put it on crooked, people are gonna, think that we don't know what we're talking about and stuff. So
yeah,
and keep in mind, I just did an event in Miami, and of course, COVID is a factor here. And we have much smaller numbers, but back when Bill was doing these, of course, he's a larger draw than I am. But it was also charging, $800 for his visits. I'm sure that's about how much.
That's $795. Yeah,
$795, and we would have 1,000 people. In fact, one of the first things that I did when I first started working at Investors Business Daily, one of my first trips abroad, it was to Philadelphia, and that's where I met Mike Webster. Actually, this was a satellite seminar. So how crazy is this? What we used to do is Bill would be in a location, and he'd have like 1,500 people watching him in that location, let's say in Woodland Hills, and we would, across the country, beam that by satellite to 20 different cities across the nation and into hotels where we would also have 1,000 people in a hotel room watching a screen of Bill in New York. He would be doing it from LA, broadcasting by satellite to New York, to Miami, to North Carolina, everywhere. And I mean, we would have, thousands and thousands of people watching this at the same time.
And so someone from IBD would be at every city they'd fly out to make sure and manage it.
We'd have a whole crew, because we had the person that was leading it, we had someone that was leading the tech, and then we had the salespeople, or, sometimes it was just a mishmash of people, whoever we could grab. Hey, you look like a warm body. Could you jump on this plane? And, when people have questions about the paper, because the paper was really the only product at that time, answer questions and sell the subscription, which was $100 and something a year at that point. So it was interesting because, the getting to know Bill over the years, that book, that was kind of the start of one of his companies. He had multiple companies, and one of the companies was O'Neill Data Systems. And the reason he came up with a printing company in the first place was because he had these books that he was creating, and first for his William O'Neill and Company, the data graphs for institutional investors, then daily graphs for the retail investor. And he didn't like the prices that the people were charging, how they kept on raising the price on him. So he said, well, I'll come up with a printing company. And then he had all this downtime on the printing presses that he had, as he was printing everything basically on Fridays to be delivered on Saturdays to people around the country. And then he's like, okay, well, I can print car manuals, and I can print the benefits,
for the healthcare and all stuff, right?
All the different providers, and stuff like that. And that company is still doing well today. It's transitioned into a lot more personalized stuff, like the explanation of benefits. It was so funny because for a while there, the hardest place to get into was the printing press. Your badge could kind of, really just cut off right there because of all the HIPAA rules. So you think with all the stock market data that we had, it would be really, really tight. But man, ODS, that was the hard part to get into.
So Justin, let me ask you a few questions, because you've been here for over 25. Well,
no, it's not over 25 years. Let's 25 years in September.
Yeah, sounds a little sensitive. Yeah, close enough. Right. So, how did you become Bill's assistant? Right. How did you start out in the IBD first, and then how'd you end up as Bill's assistant?
Well, it was interesting because I started out in customer service. I went to a temp agency. Right before this, I was working in the mailroom at creative artist agency in
Okay.
Century City,
Okay.
for a little bit. And I was doing that for a little while. My idea was I wanted to become a teacher. I wanted to do some stuff in the business world for a year. So I wasn't looking for anything, huge. I just wanted to kind of experience something in the business world. So I was doing that for a little bit. And then the recruiter that I was working with at the temp agency said, "Hey, there's this customer service job." Oh, but you know what? I don't know if I should even bring this up to you. I mean, it's 6 a.m, and you said you weren't really a morning person. And I said, "Well, what's the job?" And it's like, "Oh, it's with a financial newspaper. I guess they, talk about stocks and stuff like that." And I'm like, "Hey, I'd like to learn about stocks. I don't know anything about stocks." So I got hired, and what was interesting to me, it was such a dynamic place from the get-go. In fact, when I got hired, I went in and did these interviews, and then I got hired. And when I came back and started work, the building was completely different. The hallway that I had walked down to my interview
Yeah.
had a wall there, and now
Wait,
it was.
how long was that
It
from
was
your
just a couple.
interview?
It was just a couple weeks, just a few weeks, and I was like, "Wait, there's a wall here now. Like, what happened?" And because they were expanding the customer service area.
Wow.
This is back when we had commercials on CNBC running
Yes.
all the time,
That's how I
and
became a subscriber.
right. Well, and we would take a lot of those calls in house, because he was testing, having it outsourced,
Yeah.
and so I kid you not, there were. We had this whole program. It was called the Front End Program. Jonathan Howard was,
Yep.
very heavily involved in it. He was running it at one point. And so we would have a little siren that would go off in the customer service room when our commercial would play. And we would know about when it was going to play. And we would go through the building and we would pull anyone that was available. That would include Bill O'Neill, Scott O'Neill, who was the publisher at the time, Wes Mann, who was the editor-in-chief, Chris Gessel, who was, writing the big picture.
Wow.
If they were available to take calls, we would pull them in, and we had these long tables where about 40 or 50 people would be taking calls, taking 2-week free trial subscriptions, telling people a little bit about the paper. And so sometimes you would call and you would get Bill O'Neill, saying, "Hey, check this paper out. I think it will, do wonders for you." So it was just really incredible to me that I would be taking calls with Bill O'Neill just a few seats away from me, or even, again, I think I would see people from William O'Neill and Company sometimes get pulled into it. So Bill was never a person where, you're too important to do this job. It was, hey, when it's all hands on deck, it's all hands on deck type thing.
And so you were working there, answering phones, selling subscriptions. How did you transition to becoming Bill's assistant? How'd that happen?
Yeah, so you know what, I have to blame Scott O'Neill for that one, actually. When I was working in customer service, I was learning more and more about the paper. I became part of the speakers bureau, just going out talking to people about the paper, little investment clubs and things like that. Sometimes we'd even meet in people's houses and just tell them about the paper, and small groups and stuff like that. And eventually I was working on some programs that we had where we were, we had like stop save programs when someone wanted to cancel. We wanted to find out why, because we wanted to get better. And I was starting to do a lot of data analysis where I was using Excel. The VP of operations at the time asked me to kind of help with the project. I learned Excel. I got better and better at it. I was finding out, we could do, these formulas will basically tell us anything we want from this data. And because I was doing that, it was something that Scott O'Neill was overseeing as publisher of the paper. So I was presenting the information to him and eventually presented it to Bill. And he had an assistant at the time that he wanted to move over to head up marketing. So again, he wasn't looking at his assistants as, you just answer phones and stuff. It was, hey, there's a lot going on here. And she was a very talented young woman, and moved her over to the marketing department to run the marketing department. And so he brought me out to lunch one day, and I thought it was going to be about this project that I was working on. So I brought all of these papers and files, and it was a warehouse, I think, in Marina Del Rey is where we ate, just overlooking the water, and a real nice setting. And he said, "Hey, I want you to become my assistant." So I was like, okay, this had been 2 years of me working at the IBD at that point.
Mhm.
And I'm like, okay, well, I guess I can work a few more years just to be
Oh,
working
that's
under
right.
the.
Were you still hoping to go
Well, I
more the
was
creative
still,
artist
I was still,
agency and
no,
stuff like that, or no?
teaching.
Oh, teaching,
Yeah,
right? Okay.
I wasn't thinking I was going to be a creative artist agency, but yeah, the mailroom wasn't my my aspirations at that point. But yeah, so that's where it started, and again, it just one year turned into the next. I just felt like I was constantly learning something. One of the things that was kind of funny is I didn't necessarily, at first I was doing the phones and I was doing the mail and I was, keeping track of his schedule. I put his Rolodex, I got a Palm Pilot.
Oh.
So, I put all of his stuff, this Rolodex in my Palm Pilot so he could call me. I remember him calling me one time. I was at the beach with my family and I, took the call and he's like, oh, I'm looking for such and such number. And I'm like, I just pulled up my Palm Pilot and had it for him. And he's like, okay, great. Thanks. So I did try and move the technology forward, quite a bit. But eventually, he ended up having some other assistants that got brought on to handle some of the day-to-day operations, and I got moved to special projects. And when that happened, I moved around a lot, because
Okay.
the assistant would be right outside his office, but I sat with ad sales for a little while. I sat with editorial for a little while, sat right next to Susan Warfield, the managing editor, and Ed Carson. Those were my seat, my seat buddies. I spent some time in marketing. So for a little while. So while we were coming up with the stock checkup, I was running data for that with Mike Webster and Rajneesh Gupta. And, for a while, I actually sat with, we had like a product innovation team where it was, where I was kind of part of the data team that was looking into different lists that we had and things that we could do with them, things, ways to make them better. So yeah, I was kind of all over the place. And then at one point, I was sitting right behind you.
That's right.
When,
Yeah.
when
Which was my happiest time of my life.
right. So Scott O'Neill, he took over the reins once Bill O'Neill retired, and so I went to go work for Scott for a little bit. And Arusha was doing a lot of stuff with Scott at that point. Scott was running MarketSmith and transitioning to running all of the companies. And you remember Scott would come out every now and then and say, you guys need to keep it down.
Yeah. Justin and I would have a little too much fun, because we'd be there we'd be there pretty late. It'd start pretty early.
Right.
We'd be there very late. So by the time it became 4 or 5 o'clock, I mean, we were like the only ones in that area besides Scott.
Except for Scott.
Right, yeah. And so we'd just be talking and kind of like this, and just cracking each other up. And then, but Scott would come up and then he'd just get on us, but he kind of.
But every now and then he would join in.
Yeah, exactly.
Right. So,
but so now there were times, Justin, where Bill would sometimes get upset with you. Why don't you share one moment where he got upset with you?
Well, one of my favorites was this was, it must have been in 2000, because
Okay.
I remember that it was, I think the Democratic National Convention was going on in LA. And so I was picking him up from his home in Santa Monica and bringing him, and he was, I had the book fresh off the presses, so he wanted to see the book as soon as it was printed. So
the maroon book.
This wasn't the maroon book. This was the book for the workshop.
Oh, okay.
And I promise you, I had gotten his approval beforehand. But what I was finding sometimes is that, doing this, adding these charts at the last minute, one of the problems was that we would find ourselves under a deadline, right?
Mhm.
And it was taking a long time for the person who was the graphic designer to change all the page numbers. It wasn't like automated,
Okay.
So sometimes he'd insert a chart and then everything else all the page numbers would have to change. So what I designed was, okay, why don't we take it, section by section, and we'll say, okay, here's section 1, and then we'll label the pages 1, 2, 3, 4, 5, and then section 2, 1, 2, 3, 4, 5. So if we're going to add something to a section, we only have to change the pages for that section.
Yeah, that's a good idea.
So did that. He saw the book and he's like, trying to copy some of his notes from his old book, because a lot of the charts were the same.
Yep.
And he's copying it to the new book because he just wanted to have the new book there. And this was the first copy, so he's copying some of those. Now, granted, I picked him up. I was on time. I get there, he's in the shower, and his wife is just, throwing up her hands. And I'm sorry, he took a phone call, and I couldn't get him off. So then I'm, kind of like, okay, I'm going to have to hightail it here. And we're on our way to the downtown LA, and he looks at the book and he's like, what's going on with these page numbers? And I'm like, oh, well, this is, and I explained what my thinking was. And he's like, how am I supposed to find page 43? Justin, where's page 43? So I'm driving.
Did you say we'll divide by 5 and then add?
Yeah, and so I'm driving, 80 miles per hour, trying to get to the event on time. And now, granted, I also was, I had to set the computer up, right? Because I had the presentation on my computer. So, we got there like, right as it's supposed to start. So I drop him off, and then I'm like, I gotta find parking somewhere. And so I'm showing up, and I'm like, okay, Bill, you're gonna have to stall him while I set up. So yeah, we he was very, very fun to work with. It was it was one of the best parts of my job, because preparing for those seminars, of course, I got to sit down with him, and he'd go over what he was going to say, and so I could ask him questions. And I'd be like, oh, so and so from the audience wants to know this, and hey, that could be Justin Nielsen, right? Just sitting across from him, wondering, why is this wedging? Why is this example of Microsoft in 1991 not wedging, where this one over here is wedging? What's the difference? What are you seeing? And so I just got a lot of time like that, and that was really one of the best parts of my job. So a few yelling sessions in the car was certainly worth it.
Now there was a rumor that you almost got fired one time, Justin.
Well, I didn't almost get fired. It was a misunderstanding. Let's say.
Okay.
Of course, he was using fax machine a lot. That's he was not a he's not a big tech guy. So for the longest time, it took a lot to tell him, like, when you want to turn your computer off, go to the start button. He's like, who designed that? That doesn't make sense, So we just told him, okay, fine, just leave your computer on. Don't worry about it. But there was one time where I'm collecting the faxes from the fax machine, and I come across a resume for an executive assistant for Bill O'Neill. And I'm like, whoa, wait a minute, what's happening? And this was during one of those times where, so I had to awkwardly ask, am I getting replaced? And he's like, oh yeah, I'm gonna have someone, do the phones and the scheduling part, and so you can just devote more time onto the project. So he thought it was really funny, because I again was very pensive when I came into the office, because I'm like, oh my gosh, I think I might be losing my job. I have no idea what did I do, type thing. But it was a good thing. It allowed me to concentrate on so many different things, and it became one of those things where Bill, just whatever was on his mind. I remember doing a research project on when Obama got elected. He's like, gosh, this guy is young. Justin, let's find out, young presidents, how they did, how historians rate them. So interesting. I had 10 different historians and their ratings of the presidents, their birth dates, and how old they were at inauguration. Years and days, to just kind of get an average of, okay, the best rated presidents, how old were they, type thing. So, the projects ranged from all sorts of different things. Sometimes it was things for upstairs, things for William O'Neill and Company, things for the portfolio managers. Portfolio managers had some, data questions, and I'd help them out with that. So it was really incredible that I got to have my hands in so many different things and just get exposed to so much.
And then I think the way to end this segment, because since you are leaving Beatrice here,
you're just checking to make sure that the lights don't turn off on me.
Yeah. One of your favorite moments at Beatrice, just working in the office, and what comes to mind?
Oh, geez. Now you surprised me on this one. I wasn't prepared on this one. I mean, there were certainly, some of the guests we would have. It was impressive. Whether it was, congressmen, or Thomas Sowell, the economist was here, and things.
We had McConnell here one time.
Yeah. So I mean, that was just interesting. Sometimes on the trips, we went on a trip once where we were sitting down with Fox News, Roger Ailes.
Wow.
In New York. I was in a meeting with him at one point, and I drove him to go meet up with George W. Bush. I wasn't in that meeting though. So it was interesting, kind of being in amidst all of that. But
Yeah.
there were certainly a lot of times where I'll say that some of the best times were just kind of when there wasn't necessarily something pressing going on and just kind of chatting. Mike and Charles shared an office with Bill at one point. Oh, Mike, Charles, and Scott, they were all sharing an office, a long office at one point.
Wow.
And just after the day, we'd be in there just kind of shooting the breeze. It was just a lot of fun. He's got a funny sense of humor, very, very understated, but Charles and Mike were very good at getting him to giggle a little bit on different things, and he had so many different sayings. Charles and I were at one point wanted to get together a list of Bill's sayings.
Yeah.
Can't put lipstick on a pig. Can't kiss all the babies. And all that. So just a lot of good times over the years.
Perfect. Thanks for sharing those, Justin.
Okay. Well, when we come back for the next segment, we'll talk a little bit more about stocks and get into what things might be setting up right now. Stay tuned. The Direction Hydrogen ETF offers exposure to the top 30 pure-play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen-related subthemes. With clean hydrogen-based energy expected to grow 5 times in the next 30 years, companies building hydrogen-related businesses to generate power, heating, transportation, and more will likely thrive. Okay, welcome back to Investing with IBD, sponsored by Direction. It's Justin Nielsen here, and my good old buddy, Arusha Peiris from Oneoke Global Advisors, portfolio manager there, and he's the one that's staying here. I'm the one that's going. We're moving offices, so this is my last hurrah at this office after almost 25 years. So we just shared some Bill stories. Let's go ahead and talk a little bit about some stocks. So we talked a little bit about the reopening plays, and certainly some of these these stocks that have been coming off the bottom. We have earnings coming, earnings season coming for a lot of stocks. So Delta was, one of the stocks that reported earnings today. I wasn't quite sure if that's what was starting up the reopening plays, if that's what was kind of driving a lot of these forward. But it did seem like a lot of these were setting up. I don't think that Delta is my favorite, but you brought up Hilton. Were there any others in this area that you liked? Arusha?
Yeah, well, Hilton. I mean, essentially one thing that's essentially the same as a Hilton. You can bring up Marriott. So the hotels are looking interesting. It looks just like Hilton.
Mm-hmm.
So even though, and this is a leisure lodging industry group, so 98 out of 197. So it's not a great industry group just yet. But when you see kind of the move today, it was up more than 7%. The volume was 33% above average, and it's on the verge of breaking out, and this is almost essentially a cheat area here if you're using that a pretty sharp descending trend line, but it's within the handle, coming back up through this 52. So there are a number of reasons to consider this one if you want to get exposure to the lodging, or consider one of the hotels, because I'm assuming that a number of these other hotels are looking very similar too. So this is one that's, even though it's kind of gone through a number of bases, is essentially a base on a base. That relative strength line is right near new highs. And so what that tells me is, even though this market has been pretty volatile and in many respects making new lows over the last few months and near lows right now, or trying to kind of build out a bottom, Marriott is right near new highs. So it's showing some good relative strength. So the market does get another fall through day, comes through, and actually there is kind of a sustained uptrend. Some of these hotel stocks, since they're just simply at new highs, they might have a chance to slowly trend higher.
Would you consider this a neighbor base?
Yeah.
We were talking on IBD Live today how that was a term that you got kind of credit for.
Yeah.
The neighbor base. When you have a base that it doesn't quite make a lot of progress, but it just goes immediately into another base, and sometimes you get these, right, where it's you try, it doesn't work, you try again, it doesn't work, and then Bill often, likened this to John Wooden. He would say, John Wooden used to say, hey, you fake them out once, this way, you fake them out again that way, and then you go the other way. And so just as they're getting used to you doing one thing, you shift it up. And he said, look, sometimes it's like stocks do the same thing. So, for some people, and I've been there, I've given some of these a try, and they haven't worked for me yet. Do you keep on trying until it works?
Yeah, I think this just comes down to what we were talking about before, where it comes down to the conviction. If you really believe in this the reopen play, and you really think that the hotels are poised to benefit, and you this is where you would take a shot at them, right? Or wait till it breaks out at one past the 179 area, and you take a shot, and then just see what happens. It's on a technical level, it has resisted this market, this kind of downtrending, choppy correction type of market pretty well. And so this is I think that this is well worth giving a shot if this is the type of stock you want to go for and you have conviction. I think that's the biggest thing. When these markets really start to come around, there are a number of names that are going to come around. Now, obviously, we mentioned the energy stocks have already been working, but if this rally is going to get stronger and stronger, you need more participation from other groups. And so maybe this lodging group is going to be one of them. And so this should be on the list of things to consider at least.
Mm-hmm. So one of the groups that was up at the top was leisure lodging, as you mentioned. It looks like that was group number 3 in terms of price percentage change for groups today. So that's something worth keeping an eye on. Transportation airline was number 4. So that's something that you can get in MarketSmith under industry groups, daily percent change. Not a lot of people realize that's there. So you can kind of keep track of what's happening on a daily basis, intraday, even just to kind of figure out what's going on with the industry groups.
Now, but Justin, going to Delta, this has, and I also pulled up the JETS, which is the ETF of the airlines. This has plenty of work to do, both Delta, JETS, and so this would be further down the list, right?
Yeah.
So if I wanted exposure to the reopen play or the whole economy kind of waking up and everyone wants to get outside and really start traveling again, I'd just going off the charts, not necessarily looking at the fundamentals just yet, but really going off the charts here, I'm going to lean more towards the hotels because they're setting up. They're right near new highs. The jets, the Delta Airlines, and I'm sure United and a number of these other ones, they are still in downtrends. They're just trying to establish bottoms, and there's a lot of overhead supply that it has to go through. So there's a lot of previous highs that it has to fight through. That's all resistance. And so you have to be more patient for those. So if you want that exposure to the reopen plays here, at least between lodging or airlines, you have to lean more towards lodging.
Yeah, and American Airlines was a big driving force behind that. It was up over 10%, so even more than Delta with its earnings. And of course, American Airlines AAL has earnings coming up soon. But one of the other groups that was right underneath that in terms of performance today was energy coal. This has been one of the most consistent names in the top 3, let's say, the top 5 at least, for weeks and weeks. Let's maybe take a look at Arch Coal, Arch Resources, and this is one that we were kind of looking at for swing trader as it kind of got above this 150 level. We were waiting for the volume to come in, some volume signature, and it just seemed really light. And then, man, right at the end of the day, literally at 1 p.m. Pacific time at the close, there must have been a bunch of buy on close orders because the volume just really spiked at the end there. What do you think of the coal, or is there one that you like better in this industry? And is it too late, with the moves that these have made?
Well, I actually own a little bit of Arch Resources here. So I do like the coal group. It is ranked number 2, and a number of stocks here are acting really well. I almost want to say that some of them are potentially forming high tide flags. You could even argue, let me go on a weekly here, but even Arch Resources here, it has the resemblance of a high tide flag. I don't know if it necessarily meets the definition on the kind of the pole part of the flag.
Maybe
it might
not
be a little too long, but it's gone up 100% in a short amount of time. Maybe a little. Usually, it's like 8 weeks is the maximum for kind of that initial run. So this is going to be pretty close, and then it pulls back 2 to 4 weeks. And so this looks like it's like 4 to 5 weeks. Maybe it's pulled back, but so maybe it's not exactly a high tide flag, but it's kind of falls in that concept. And there are a number of coal stocks that look like this. They had these really powerful runs. They've taken a short time off, gone sideways, and now they're trying to resume higher. And so RS rating of 99, the RS line is just straight up. And so there, if the market is to continue, and if say the market really starts an uptrend here, a lot of times those stocks that haven't really given back that much, they're the ones that can continue to go higher. So yeah, I do like this group. I think it looks interesting. And so Arch Resources is one that I did take a shot at. Some of the others were a little too extended, and so I actually bought it yesterday, Justin. But that was not me with that big volume coming in at the end.
Okay, well, thanks for making that confession, or lack of a confession, I guess.
I was more with Aunt Betty.
Right. Yeah. So, you know what? Let's go ahead and take a look. Because again, when we're talking about the things that have been working, I mean, we have to include oil in there. And one that kind of popped on my radar today, it's been on there a bunch, is Oneoke, OKE. This is in the transport pipeline. Again, a lot of things associated with oil have been doing well. It seemed like there was a little bit of a pullback in some of the oil stocks, but this one really just seemed to flatten out. It's it's holding right above its 21-day moving average line. It broke out recently, but it hasn't quite had the moves of a lot of oil stocks. So it's in a different industry, being in transport pipeline. So do you ever shift to say, okay, are some of these going to come on strong? Some of the infrastructure plays, or is it, hey, you know what, you got to go with where the strength is, and the ones that have been moving first are the ones where you want to stay?
Yeah, I almost feel like you've been looking at my portfolio, Justin, because I do own this stock too. Now, the simple reason why I got into the stock is I just was too slow to get into some of those other stocks, or got shaken out of some of those faster moving oil stocks. So I just wanted more exposure to the industry, and so I bought this one. I kind of put this in the second tier category because it hasn't been the rocket ship like a lot of the other oil stocks. But that being said, oil is one of those type of areas where they all kind of travel together. And so even second tier, third tier, they can still end up doing pretty well. So having some exposure is better than having none, as opposed to some of these growth stocks where you really want to get either the first or second within that group. So this one's hanging in there. I do like that. It's been going sideways for a few weeks. It's putting a 3 weeks tight. RS line is right near new highs. So that is a positive. I think I brought this up on IBD Lab a couple of months ago when it was breaking out of that base, or getting really close to breaking out of that consolidation. But it hasn't moved. It's only 7% from that point, versus some of these other oil stocks have made a lot more progress. So if I had a choice, you want to be more with those leaders, but I have to wait for those leading stocks, oil stocks, to come back and give me a more proper entry before I could kind of get more into those.
That's been tough, because some of the pullbacks have been on the steeper side sometimes, and you're like, okay, well, is this too steep now? I mean, it just one of the things that I think Oneoke has going for it is just that really tight action. You see the little blue shaded area if you're looking at the MarketSmith chart on the video portion of this podcast, and when you see that, it's something that's very striking. A lot of times Bill would talk about that. I certainly learned about this working with him on the books, Successful Investor, and How to Make Money in Stocks, where right after breakout, when he would see that, he would call it the stealth accumulation that institutions were doing, where they would be saying, hey, if there's any shares that come up, just buy them, just buy them at whatever price. And so not whatever price, but at this limit. And a lot of times you would get that pattern, that 3 weeks tight pattern afterwards. So great. Well, Arusha, thanks for being here, coming into the office.
Likewise.
On a day. Right, exactly. It was good having a send off from you, and we'll definitely invite you over to the new offices at some point so you can see what a real view looks like. And, or I'll just invite you to my house, and it'll be live from Justin's dining room table. We'll have to do this again in person again.
Absolutely.
Sometime. Okay. On the show next week, we have Eric Kroll coming back. He is he's actually one of the guys that I was initially going out to one of his meetup groups. That's when I first met Eric Kroll out in Chicago area, and he's been at this for a long time. He's written a book along with some of his co-authors on the life cycle trade, and he has a lot of data on the follow-through days, and he'll be sharing some of his recent updates to that data when he talks with us next week. So hope you tune in for that. Thanks for being with us this show and humoring me through my stories. It was a pleasure. being at this office in Beatrice Street for so long, and looking forward to another few decades of this in a new office. So looking forward to that. Take care, everybody. We'll see you next time. Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We'd love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.